Hello and welcome to Pro Trader Strategies Market Commentary for Monday, November the 7th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. It's a Monday, not a whole lot of economic data coming out today. It is the day before the election, so a lot of people probably shoring up some of their positions. I talked about this last week that we saw volatility really start to increase going into this election cycle, and that being said, we're going to probably see some of this volatility start to come out. It's actually coming out a day earlier than I thought. It's almost like it is a market-wide earnings event where we've seen the implied volatility or volatility start to increase heading into this binary event, and then we should see some volatility crush right after it. We're starting to see that volatility come out a little bit sooner than I anticipated. I talked about a couple of things in the Friday webinar about just that, and you can check that out at protraderstrategies.com. Anyway, on to the overall markets. We've got crude oil up slightly on the day, up about 23 cents. And it is right there at the 50 Fibonacci retracement level. It looked like on Friday that this doji was going to make it look like it was, kind of bottoming out as we kind of came down to the point of control here, which is where the most time has been spent, the most volume, a little bit higher. But today's action is almost making it look like there's a continuation pattern going on here. So we'll have to see what happens tomorrow, whether or not it can confirm it to the upside. It looked like it got confirmed. If it would have stayed up there near the highs, that would have been confirmed that it would have been a bottom. But the way that it's looking right now and starting to come back off is starting to look like a bit of a continuation pattern in there. But that's crude oil. On to gold. Gold coming off because the overall broader equity markets are really rallying quite nicely today. Gold down $22 and back below that $1,300 troy ounce in the, which is a real psychological level for gold. Then the bonds. Bonds down about a half a point, just slightly over half a point on the day, down 18 ticks, and right at the point of control, or where the most time, or the most volume I should say, has been spent. That one thing to note is that the line did move, so the volume has down-ticked a little bit. I talked about it wanting to stay up here above this 50% Fibonacci level. It's gotten down below here, and we have increased the volume enough to move that point of control. So that is something of note. We could easily, like I talked about, having it trade right by that Fibonacci level and fill this in to make this a nice big node heading forward. So I don't really see it really continuing down too much, although once we get this cross that I've talked about, that is a big signal for the bearish trend, if you will. On to the Dow Jones, up almost 300 points on the day, right at the 200-day moving average as we speak, but on the highs of the day, you can see just a big move today in the overall equities. The markets really are just going gangbusters right now on the equity side. NASDAQ /NQ up 100 points on the day, heading right back to the point of control there. So I talked about this on Friday also, how these dojis down here were looking like they were starting to really find some support down there with the E-mini S&Ps, as you can see, up almost 40 points on the day, just non-stop to the upside, it seems like, just continuing to push higher, and didn't even look at this 200-day moving average this morning. We just gapped above it, which we'll see on the breakdown of the 15-minute chart. This is the 15-minute chart of the E-mini S&Ps. As you can see, we gapped way higher from closing on the lows at 2078 and opened right here basically for the most part right up here at 21 something. So just a huge gap to the upside, which you don't normally see, which is really giving the bulls a lot of steam to the upside, and as you can tell, making new highs right now as we speak, up almost 40 points on the day. Then on to the overall broader markets. Yes, Bristol Myers, I actually covered this already today. I put it on Friday, covered it today because I got about 25% of my max profit, almost 50% of my max profit actually. Anyway, and Bristol Myers, I had on the December 47 puts that I originally sold for 51 cents, bought them back for 29 cents. So I made a nice profit in just a day off of the volatility coming out and having that directionality correct. So I talked about this several times in many of my webinars. I give basically days to in the trade and the percent of profit that you can achieve during that time. And if you can achieve that profit within that given period of time, it is the time to cover that. So I decided to take my money and run on that with 1 day into that trade and having almost, what is that, close to a 40% profit. That's 20 some odd percent, I should say, profit. That's time to cover that one. So I took advantage of that as well. Then on to SPY. Now, Friday afternoon, I decided with volatility cruising higher, the way that the dojis were talking about, sizing up, I decided to put in a strangle in this market. And I went into the November thinking I just wanted to take advantage of some volatility crush. Went into the November, sold the 198. 216 strangle, and I collected $1.91 for that. Well, that was just a play on volatility crushing out, so I wanted to take advantage of real fast theta decay and volatility crush on that, which I'm getting today. But with the market starting to turn around and volatility coming off, with the equity market starting to spike, I decided to add a little bit more to this strangle in SPY, but I went into the December and sold the 205 217 strangle in there. So it's about a 30 delta strangle. It got a little bit tighter in there because, again, I want to take advantage of some volatility crush that's going to happen, and sold it for $4.29 for that. So if I can get 50% of that in the next couple of weeks, then I'm going to look to take that trade off as well. So put 2 strangles on in SPY, one a little bit wider and then one a little bit tighter, to try and take advantage of this volatility crush that we're hopefully start to see. We're starting to see it. Hopefully that continues to happen. Anyway, on to IWM, again, adding another strangle around that. If you remember, you guys, I've been taking a lot of short deltas off. My portfolio has gotten quite long in the delta side, which I'm happy with, especially with this turnaround that we're starting to see. So I didn't want to add short deltas necessarily right now. I just wanted to add delta neutral strategies. So that's why you're starting to see a lot of these straddles and strangles that I'm going to be talking about today. So again, with IWM, went in and decided to do another strangle in there and did the D's 109 124 strangle and collected $1.44 for that. So again, another strangle. Keep myself delta neutral on the trades that I put on today and keep my portfolio overall delta long. Then the last trade that I did was in AAL, and this is for Corrine out there that was a participant in our webinar. This was one of the last ones we started to look at. I didn't have enough time to really go into it in detail. She asked me to look at this because in these webinars, I throw it out to you guys and back and forth whether or not, there's some stocks out there that you guys want me to look at. So this was for her on her last minute one that we kind of started running out of time for. So I said I would look at it today for this. So it looks like it's a pretty good strategy for this. They've already had earnings. We don't have to worry about that. And they are in a nice trending up move for this. So I decided to go ahead and take a shot at this one. It's not one of my favorite strategies. I talk about that in the webinar, but I do go through a lot of the rules that I go by for this strategy. And American Airlines, ticker symbol AAL. I did the January 41 straddle, and I actually paid $5.02 to put that strategy on. So I did it really small. It's because it's not one of my favorite strategies. It is swinging for a home run, low probability trade, so very small increment on that. So keep that in mind as well. I do my bigger quantities on the selling strategies where I can collect a credit, and for these debits I usually do them very small. All right, so go to protraderstrategies.com. You can find out all the rules about this straddle and check it out for Friday's webinar. I also got a Trader Expo coming up in the next month or so, so you can also look forward to that. All right, that's all I got for you guys today. Hope you all had a great weekend, and if you can't take that, take it easy.